Welcome to Nirmal, ladies and gentlemen. I'm Hiral Dadia. We have with us Mr. Somasundaram, PR, Regional CEO, India World Gold Council, joining in. Welcome to the show, Soman. Always a pleasure to speak to you and get insights from you. So, overall, with the way the dollar index has been moving right now, what's your read with regards to gold as a commodity?
Well, as you know, gold as a commodity is a quasi currency, and it has still got lots of trust amongst investors and consumers who buy it not only for the ornamentation purpose, even the jewelry consumers I met. They know that there is value in it, which can be encashed at a time of need. So it continues to be an asset class of attraction at this moment of time, although there has been a softness in price, which has probably driven investors more, and particularly those who are immediately concerned about US interest rates and US dollar strength, to probably wait and watch gold. So you see, therefore, the softness in price is driven by the essentially what's happening with the US interest rates. But when you look at the consumer side of things, people are waiting and watching because they have seen a softness in price, which is always good ahead of a major season like Diwali. So we'll have to wait and see how this plays out during Dhanteras and Diwali as far as Indian demand is concerned. Probably investors at this moment of time gold is facing headwinds in terms of US interest rates. And I think we will probably see this continuing for some time.
Right. So if you say in terms of the headwinds as well, and when you talk about, investors being on wait and watch mode, is that a phenomena across, or is it between retail buyers? However, the wholesale market is something which continues to do well.
Well, it is essentially, when you say the wholesale market, you mean the institutional ETF market.
Correct.
Right. And also the retail side, which is the jewelry market, which is the investment side. So what we are seeing is that obviously the ETF market, we continue to see that investors are more focused on what is the US yields, which due to the interest rates rise and possible future increases is certainly acting as a headwind to gold. Okay. So you will see certain outflows continuing. But everyone is generally, the understanding is this is not going to continue. Clearly, at some stage, that the rate increases cycle has to stop. And we have always seen this in the past as well. When there is an expectation, gold performs in a particular way. Once that is behind us, gold absolutely comes back to its normal shape, which is when we have to see maybe a year from now, how is gold going to perform? At this moment of time, clearly there is headwinds for the investors. Now, coming back to the consumers, when I say consumer, the jewelry and the bars and coins. Now, there is enough happening across the globe in terms of creating anxiety, the inflation itself, which is acting in both ways. There are pockets where people are not able to afford because of inflation. And there are pockets where people have money and they definitely would like to hold gold as a hedge against inflation. So you see a mix of these operating in the consuming market. Therefore, it is not a one-way street in that sense that people are focusing, now I have to buy lots of gold. That's not the case. You have some people not able to afford, you have some people just waiting and watching and probably wanting to hold more gold. So in a sense, therefore, you see a certain softness, but with an inclination towards higher demand.
Right. So overall, if when we talk about the demand as well, especially with central banks, if I see central banks across globally, that demand in the month of June has remained low, pretty robust in spite of all the economic challenges that we've seen. How would you read this?
Well, we have given our views even at the time of the quarter two. We said that central banks will continue to buy gold. They may not buy as much as they bought in 2018-19, which was one of the highest ever since the gold standards were introduced. I mean, just before even the gold standard, 650 tons plus. We may not see that kind of figures, but central banks continue to buy, 13th consecutive year of buying. And it is also not anymore dependent on some of the big names buying chunk of it. It is now all the various central banks, lots of them buying small quantities. Okay, so it is more diversified than it was prior to 2015 when you relied more on Russia and China market. Today, they are out of the market, yet you see central bank buying very positive. So this is likely to continue because of the various issues in the global scenario, as well as the fact that they do consider that gold in the long term will perform and will strengthen the portfolio.
Right. So overall, from a pricing perspective as well, at what levels are you seeing stabilization?
Well, we don't forecast the
I know.
Yeah. Look, when it comes to gold, it is not the absolute price of gold which matters. It is about always the relative price. We did see about 4-5 years ago gold around $1,200 as well. Today, you're seeing closer to $1,800, $1,700 to $1,800. People continue to buy. India continued to buy 800 tons, despite the fact it moved from 30,000 to 50,000. All right. And it's the same case everywhere else, China, Middle East, US market itself, the jewelry market. So although the price jumped by nearly 50% and above in many of the local currencies, people continue to buy the same quantity of gold or slightly higher quantities. Okay. So it is a little, in a sense, difficult to say at what price will you find an equilibrium for the purchases. I don't think there is such a point. It's always a relative point. At this point in time, what we see and which we are actually facing now, anything less than 1,800 is what seems to be the market preference at this moment as we go along. But we have to see closer to Diwali, Dhanteras, particularly in India, when premiums generally go up because of higher demand.
Right. And overall, if you see in terms of, the demand as well, as you mentioned, yes, economic uncertainty is one of the reasons, but how big a factor is higher import duty playing as well?
Well, actually, the higher import duty has got lost in all the developments that have happened in recent past, because let's not forget, as I mentioned, between, let's take 2019 and now, how much have the prices moved from 30,000 to 50,000? Okay, it might be 45, 50, that range, but it is actually with GST touched already 50,000. So that's about 55, 60% jump, right? Now, definitely duties are high, and duties tend to create a problem for the compliant part of the trade. But when it comes to the consumers, whether the price goes up because of duty or the price goes up because of a global factor like US interest rates coming down or whatever maybe the other factor, or a geopolitical anxiety, they don't know. They just see gold price going up. In the short run, they always want to buy more with the amount of money they have allocated to gold. So there will always be a tactical move to buy it at the best price. But in the long run, we have seen it over several researches. People love when prices go up. So whether it is due to increase in duty or it is due to other factors, expectation is that price of gold should keep going up over the long term. So in a sense, immediately, we don't see much impact of this 5% on the consumer behavior, but does it affect the trade? Absolutely, because a compliant part of the trade, really suffers during this period. And several actions taken by the government to reform the industry will take a backseat because you have the gray market, which will strengthen.
Right. And then with this, another phenomenon I want to ask you, Soma, is overall what happens is the moment when you see prices fall, yes, there's a possibility that jewelry demand, consumption demand will be low. But is there a possibility that the investment demand will pick up as well because, prices are going down, and probably ETFs, or for that matter, gold coins and bars is something which will pick up?
We expect that the coin and bar demand will absolutely pick up if the softness continues into the Dhanteras Diwali season. No doubt about it. But you must understand, in the overall scheme of things, the bars and coins demand is a very small fraction of overall demand in India. It will continue for various reasons, because it is still, the entire demand is driven largely by the jewelry trade. Even the bars and coins largely buy from a jeweler. for whom the bar and or a coin will be the last one they would love to sell. They would always love to sell a jewelry piece. You don't walk into a bank and get a coin, unlike in some countries, even China. You don't have a gold deposit account which you can just close and take away. As long as these things don't happen, you will see that people who, even those who wish to buy gold for investment purposes, will rely on simple jewelry rather than bars and coins. So while bars and coins will grow, there is no doubt about it, but it is not something which will at any stage overtake jewelry demand in India, because it's hardly 15-20% of overall demand. Even if it goes up by another 5%, it's not going to change the scenario dramatically.
Absolutely. So I think that's the overall picture that we're looking at as well. Thank you so much for joining us on the show. Always a pleasure to speak to you and get insights. Thank you. Stay safe and speak to you soon again.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.